about betas, and we understood how to calculate beta. Beta is what? Basically risk. It captures the market risk. Okay, because once you are in a portfolio, then beta becomes assumes a significance, and it is also used for calculating the cost of capital. Now we know that there are various methods of calculating beta. In the last class we understood how betas. So betas, there are various approaches to calculate the beta. Now why do we require beta? Because you have to calculate the cost of capital through CAPM approach, the capital asset pricing model. ठीक है, जो हमने देखा था हमने RF plus beta into RM minus RF. So historical beta, market betas we have already calculated by pulling out the data from Yahoo Finance. Historical data निकालिए company का, and then we calculated the market returns of Nifty, and then we regress the returns and calculated the beta. So now we are doing betas from fundamentals. Okay, how do we know that beta? This is a statistical measure. Okay, fine, but what is the meaning of really the meaning of beta? How it can be calculated with the help of fundamentals of the company, what the company is doing. Okay, so it all depends upon the business of the company. So let's understand that. So then there is another method called bottoms of beta. So we'll talk about that a little later. So betas from fundamentals. Okay, fine. ये खोलो, अब उसको पढ़िए. So basically beta for a company may be estimated from the regression, but it is dependent on fundamental decisions that a company has made on what business to do. What kind of business you are doing. Fine. Is it a risky business or it's not a risky business? When I say risky, it's volatile. It keeps, there's a lot of ups and downs in the business. It's cyclical in nature. Sometimes, company is doing very well because the economy is doing very well. World economy is doing very well, very well. Indian economy is also doing very well. So it propels the company to perform better. Okay. But time when, the economic activity comes down, because of many reasons, like there is a deficiency in monsoon, or the interest rates are climbing up, inflation is going up, so some companies underperform at that time. So companies performance keeps going up and down because of its own cyclical in nature, because of the economic macroeconomic situation. So what kind of business how much you are getting impacted by the economy or the macros. So if you are more sensitive to the economic changes, okay, then the company will have higher beta. For example, if you talk about hotel business or airlines business, or any luxury segment, like a company like Mercedes who's manufacturing top end of the cars. So those companies, yeah, for example, Disneyland, there's a they're like water parks in India. So those companies only perform when the economy is doing better. We only buy their products when we think that the situation is good and we can afford that kind of a luxury. So those businesses will be always having a higher beta. Okay, and you can find that their businesses keep fluctuating also depending upon the economic situation of the country. Similarly, if you take companies like FMCG companies like Hindustan Unilever, Colgate, ITC, all these companies, they or pharma companies. Okay, these companies always, they don't have much volatility. Of course, they can have their volatility because of their own reasons. Like pharma companies are impacted by the decision of US, because they are exporting most of their products to European countries and America. So sometimes they put on hold because they are very strict about the quality of the product. So they come and inspect Indian plants. So sometimes they put some companies on red alert. So that time those companies don't perform. Okay, because it can be company specific. Otherwise, the business of pharma is such that they are making medicines mostly, and we always consume them, whatever is the state of the economy. We don't use our discretion. Okay, so those companies will always have a lower beta. Like for example, Sun Pharma, Cipla, okay, and of course all FMCG companies I talked about. So if you look at the beta of those companies, they'll be below 1. And companies which are in discretionary products, उनके betas हमेशा 1 से ऊपर होंगे. Okay, so the beta is 1, the market beta is 1. Okay, when you look at market, means either Nifty, Sensex, or a broader index, okay, which represents the market as a whole, because Nifty has 100 stocks, and Nifty Sensex has about 30 stocks. Similarly, there can be 100 index, BSE 100 or BSE 500, which is a larger index, so which covers all kind of companies, large cap, mid cap, and small caps. So whereas Sensex and Nifty are covering mostly the big companies of India. Okay, so the beta depends on the business first. Then it depends upon how much operating leverage it is using, and the degree of financial leverage. So there are two things which are leverages, which are operating leverage and financial leverage, which also impacts the beta of the company. The company which has high fixed cost component will always have a high beta, because because company has to cover the fixed cost. Okay, suppose a company which has almost say 80 to 90% of business is on fixed cost. For example, telecom companies. Okay, like I have worked with Reliance and Idea Cellular or Vodafone Idea now. So there most of the cost is fixed in nature. They used to put towers on the rooftop, and all exchanges on their they all the equipment was the telecom exchange, which they have set up in their area where they put that telecom exchange. So most of the cost was fixed in nature, and the variable cost was just for example, a SIM cost. A SIM cost is just this SIM is only 2 rupees today. Okay, when I was in telecom, it used to cost 500 rupees or 300 rupees. So the SIM cost has come to 2 rupees. Even the telecom tower, which used to cost 1.5 crores, now cost only 5 lakhs. Okay, but still, nonetheless, the costs are fixed for telecom, and the variable costs are very. I mean, variable cost can be the distribution cost of SIMs. They distribute their telephone connections through the help of channel partners, so they pay something commission to them. So that is variable. How much they sell, how much they are able to place those SIMs to the subscribers. Then they use those SIMs, so they pay some money to their channel partners. So that is variable. So apart from that, everything is fixed. So those companies which have a high operating leverage, if their turnover falls, their profits falls, in a great manner. So I'll just show you that thing. So then use of financial leverage. That's the use of leverage. That means use of loan. Okay. So I'll just show you, an Excel sheet. So you have an Excel sheet in your, this thing. So you can open that, which is called leverage. Now, this is a company whose profit loss is given to you. Okay. Income statement. So this company is doing a sale of 1 lakh units, and the selling price is 2 rupees, for example. So that means the total sale is 2 lakh rupees. Okay, very simple. Then it has a variable cost. So what we do, we break the cost into variable and fixed. Now, sometimes it is not possible to break the cost into fixed and variable. There will be some expenses will be semi-variable also. But just to keep the things simple, I made a clear distinction between variable and fixed. So variable cost is 1 lakh. Sorry, units is 1 lakh. Variable cost is 70 paisa. So that means total, cost is 70. So sales minus variable cost is called contribution. Have you done your cost accounting? So you understand that. So sale minus, variable is cost is contribution. Okay. Then suppose the company has a fixed cost, in terms of salaries, in terms of rent, all those which costs are fixed. Okay, we know that. So there's a fixed cost of 1 lakh rupees. Okay. So then we minus the contribution from fixed cost, we get operating profit of the company, which is called EBIT. EBIT is earning before interest and tax. Okay, fine. Then there is some interest. What company has done is company has taken now before that, I'll just tell you the variable cost is 70,000 and fixed cost is 1 lakh. So if I calculate the percentage, so variable cost is 41% and fixed cost is almost 60%. So that means the company has good amount of fixed cost. Okay. Now let's see the capital structure of the company. Company has equity and debt. And equity, there are 2,000 shares, okay, of 10 rupees each. So 20,000 rupees is the share capital of the company. And company has taken a loan, debt, which is, at 11.25%. For example, we can have any interest rate, 50,000 rupees. So total capital of the company, 70,000 rupees. Is that okay? Is it clear? Now let's go to here and see. Now the interest is here, 5,625, which is calculated based on this formula. We can just check that it is based on 50,000 into 6.2. It's coming here. Is that okay? Okay. So this is so 5,625. Is that okay? Is that okay? Then then EBT, earning before tax, which is, just listen to me please, 30,000 minus the interest. So this is EBT, earning before tax. Okay. Now tax. I have assumed 30% tax. So I've calculated 30%, so I can check the formula. So it is basically this multiplied by 30%. Okay. Then this is the PAT, profit after tax. The company has paid tax, so this PAT belongs to whom? The shareholders. So PAT divided by number of shares, you get earning per share. Okay, I can show you. So which is your number of shares are 2000 and 17,000 is the profit divided by 2000. So earning per share is 8.5. Is that okay? कंपनी का ₹8.5 का शेयर अर्न कर रही है. Okay. Now assuming company shares are trading at a P multiple of 10. Have you heard about P multiple? Now whatever is the first to just to simplify that, company EPS is how much? 8.5. Okay, and company share is 85 rupees. In the market, company share is 85, 10 times than earning per share. Okay, fine. So just to give a perspective, if you look at Indian companies, on an average, the Nifty or Sensex, uh, that is trading at 20 times than earning per share of all the companies of Nifty. Okay. हाँ, price earning क्या है? This is a ratio. Actually, it talks about it's a market price per share divided by earning per share. Okay, whatever is the market price per share divided by earning per share. So I'll just show you here. We'll go to screener to understand that little bit, and then I'll come back. Okay, so we have the screener. Okay, for example, let's say Reliance again. We can take any company. Okay, here the stock P is how much? 24.7. Okay, so what I'll do is that I'll just close this because I'll open the new window. Okay, where I have logged into this site, so we'll use that and go to screener again. Okay, and go to Reliance again. Okay, now here why I have chosen this, because here I have my login is there. Okay, so I have put some lot of ratios here. You हाँ, दिखाएगा वो रेशो, तब दिखाएगा जब आप ऐड कर दोगे यहाँ पर. इफ you have to add this ratio. Okay, there are a lot of ratios by default. When without login, you will get only the ratios which the screener is giving you. Now you can pop up those ratios also yourself. Okay, so I'll allow you to take a printout. I mean, you I mean, this will come in your recording also, or you can just take a screenshot of this. Okay, fine. And हाँ, हाँ, ऐड कर देते हैं. और आप देख लो मैंने कौन सी रेशियो डाली हुई है. आप इसका फोटो भी ले सकते हो और अपना डालो. इसकी फोटो ले डाल के व्हाट्सएप में डाल दीजिए. ओके, okay, that you can put it in a WhatsApp. Okay, now the stock P is how much? 24.7. Okay, look at the earning per share. How much is the earning per share? 101. So now I'll just use my calculator. What is the share price? What is the price of 2496 of Reliance? ये लिखा हुआ current price. So what I do is 2496. Okay, divided by earning per share. What is my earning per share? 101. So I get 24.7. So P ratio is how much? What is the P ratio given in the Reliance? So that means Reliance is trading at 24 times more than what it is earning. Okay, fine. Earning per share. Okay. So Reliance is trading at 24 times more than its earning per share. So the company, I'll just give you a brief about that. There is a relationship between earning per share and market price of the share. The company which earns more will have a higher market price per share. The company which earns less will have a low market price per share, isn't it? Whichever company earns more, it will command a higher, PE ratio. Fine. A company which earns less will command a low PE ratio. Fine. So the market price per share and earning per share are related to each other through a ratio called P ratio. Okay. Now the P ratio is dependent on the industry. Okay, every industry has its own P ratio. Fine, that is called the industry P ratio. If you take all the companies in the same industry, okay, and calculate an average, we get the industry P ratio. So what is the industry P ratio I'm getting? Industry P ratio कितनी आ रही है? 5.26. Now it's very low. Fine. Because, there is no comparison of Reliance with any other company. Reliance is a conglomerate. Let's talk about, say, for example, there's a company called, Asian Paints. Okay. Fine. There are so many paints companies. Okay. Now look at the stock P of the company, 62.6. The companies which are doing very well, which has a great future, and which are into consumer facing industries, they will command a very high P ratio. So this ratio tells you that Asian Paint is very expensive compared to Reliance. It trades 62 times more than what it earns for its shareholders, isn't it? And this has been the average of a P ratio. Historical average we look at, it trades around this level. हाँ हाँ so let's see ये अब बताओ इसका अर्निंग पर शेयर कितना है 52 fine and its share price is 3000. So when you look at compared Reliance, which is 2,400, having an EPS 101, trades at 24 times, whereas Asian Paint trades at this thing at 62 times. And look at the peers. यहाँ पर peer है, इसके सारी इसकी industry है. Asian Paint, Berger Paint trades at 66 times. Okay, Narrowlak 44 times. Asgo Noble 29, 53, 71. So Asian Paint is a market leader. It is the top 5 companies in the world in the paint industry. Okay. Then, whereas, Asian Paints, almost 80-90% of the product is consumed by households. Okay. But some other companies, they are selling even to industries like Maruti or Hero Moto for painting their motorcycles or cars. Okay. So they are not selling to consumers. They are not selling to, the retail. So those companies which are retail facing, they will always command a higher P ratio. Okay. They are directly selling to the people. Okay. Industries can go up and down, but as population is growing, so these companies always command a higher P ratio. Let's talk about, for example, Hindustan. चलो हम इसको देखते हैं हीरो की देते हैं हीरो मोटोकॉप See, Hero MotoCorp is what? 23.3. It's an industry. So all companies which are into, old economy, just listen to me. ऐसा नहीं है. Listen to me. All companies which are into, manufacturing, okay, or which are into, products like, we're talking about, they will command, compared to Hindustan Liver or Asian Paints, they'll command a lower P ratio. All new economies, all old economy companies, they trade at a loop. Like if you look at Tata Steel, it was trading at around close to about 8 to 9 P ratio. Okay, let's look at Tata Steel. Like let's take Tata Steel. Tata Steel is how much? P ratio आ रही कहीं? हाँ. Because it is absurd number because they are into losses, okay, and making a very small profit. So the P ratio looks to be very high because the company cannot drop down to zero. Okay, fine. 136 रुपए का share है. So and the profit is very less. So some companies they trade at some profit, but when you look at the P ratio, they give you a very high P ratio because that the EPS is very less. What is the EPS? Minus. So actually the P ratio calculate is wrong here. The companies which are into negative negative EPS, the P ratio cannot be calculated for them. So maybe that because it's all formula driven, so the screener formula has calculated the P ratio. I don't know what basis, but this is not the right P ratio. Okay. So let's talk about, for example, Tata Motors. Okay, which is again an old industry. P ratio is how much? 16.8. So all old economy companies will trade at a P ratio close to about 15, 16, 17, 10, 12 like this. Let's look at, company like Indian Oil Corporation, okay, which is a, company which is basically, they can't sell their petrol at whatever price they want. It's all government control. The P ratio is just 4.53. Why? Because Indian Oil Corporation, they are actually oil marketing company. They can't increase the price of the oil. Though, of course, the government has given the freedom, but government always tie them. They don't allow them to increase their petrol prices. So they can't run the business on the lines which, any company can normally do so. So that's why they trade at a very nominal P ratio. They don't command high price. Okay, fine. Is that okay? So I'll just tell you now. Now P ratio. Now if the P ratio is high, what does it mean? It means two things. The two things. The company is very good. Company is growing. Company has a great future. Okay, but you should always look at the industry P ratio, fine, and compare with that. So, for example, if you look at, for example, इसकी P ratio कितनी है? 4 point. What is the industry P ratio? 5. It is actually Reliance is also in the same bracket, but you can't have Reliance and IOC in the same bracket. Fine. So this is okay. This is 5.26 and stock P is 4.3. So it is comparing to the industry. Peer comparison इधर आइए देखो ये peer comparison में Reliance का नाम भी होगा. Reliance is an odd man out in this industry. Fine. So all are trading at a very low prices. IOCL, BPCL, all oil marketing companies, they trade at very low P because the government tells them when to increase the petrol price, when not to. So they can't run the business on the business lines. Okay. So people will not buy the shares. When they don't buy, they don't push up the P ratio. The companies which are doing well, now I was talking about two things. Okay. The P ratio can be very high or can be very low. So what does it mean? A high P ratio means the company is in an industry which is, in a new economy industry, number one. Number two, why it is high? Because it's a growing company. It has a great, potential to grow further. Okay, it's highly profitable. Okay, it is in the new economy system, and it may be overpriced, but still people are buying it because it has a great future. The price, they have pushed up the price. Okay, now a company P ratio may be high. We can say it is overpriced. Okay, why? Because it should be trading at a low PE ratio because the industry is trading at low and it is going up. The company doesn't have any future. For example, अगर हम आगे देखें, company will not grow so much, but that means the PE ratio will fall. People will sell the shares and the PE ratio is going to fall. So don't buy that share. Okay, if you think the PE ratio is high but the company doesn't have a future, then that is overpriced. But if the company has a low PE ratio, that can also mean two things: that it is today selling very cheap because people don't know that company. It's a new company, but it has a great future. So you should buy those companies which has low P multiples if the future is good. But then there are companies who have low P ratio because they deserve to be there because the companies that doesn't have any future. For example, company like BPCL, IOC, because those companies are not running as business units. Okay, they have been they have been controlled by government. Okay, so don't buy those companies. They are they command a low P ratio and they're trading at a low P ratio. In case if the P ratio goes up, go and sell those companies if you have. Okay. So let's go back to this thing. Yeah. I'll just tell you. That's a good question. So I'll answer that. I'll answer. When we talk about P ratios, so we talk about industry P ratio. We always feel that companies can be compared if they are within the industry. Okay. For example, if you look at IT companies like Tisco, Wipro, all those companies, TCS and Mahindra and other things. So they are all good companies. If you look the P ratio, all the companies are trading in a band of say 80 to 24. Okay, so उसमें ज़्यादा variation नहीं है. The average will not get distorted as you are saying. Reliance can distort the average also, for example. Okay, now it is not the average actually, it's a median P ratio which is calculated, which is more representative. Okay, average can be distorted by one outlier. For example, Reliance can distort the P ratio of the industry. So we don't calculate, it's not the average P ratio, it is the median P ratio. It is written average because median is also a measure of average. Okay. So it's actually the median P ratio. Now, the whole idea is that, when we are looking at the P ratios and we try to compare, whether this P ratio is high or low, we look at the comparable companies. Okay. अगर हमें किसी को कंपेयर करना है तो उसी के पीयर ग्रुप से कंपेयर करना है तभी तो बताएंगे कि सस्ता या महंगा है. ओके सो unfortunately, in India, there are very few companies in each industry. If you go to, US, there will be, 30 companies in the same, kind of industry because the business is large and, all the companies are mostly listed there. Fine. In India, you will find 5 or 6 companies in a peer group and some of the companies cannot be compared at all with each other. So the industry average or industry median loses its significance because of the situation we are in. Okay. Fine. So if we have to say that two companies are comparable, then we have to look at two different parameters. Okay. not just the industry. So I'll just talk about that little later. How do we look at the, comparable companies? If you compare, for example, you are comparing, company like, HDFC Bank, you can compare it, for example, with any other company like, which is having the similar market cap, or which is, having similar kind of sales, or which is growing at the same rate. So if these three parameters are met, we can say these companies are comparable. They should be trading at a similar P ratio, not because they are in the same industry. Okay, because industry comparison is very difficult, because Asian Paint, as I told you, is a company which is actually selling 90% to 80% of the product to retail. Whereas, for example, I'm just saying there is another paint company, Asgo Noble, which is basically supplying all its paint to industry. Fine. So there is no comparison with Asian Paint, because that is, supplying to the, it's an intermediate product for the industry. It's also in a paint industry. But Asian Paint is selling only to households. So both cannot trade at the same P ratio. And Asian Paint will always command a higher P ratio. Whereas a company which is only supplying to industry, they will be selling at a lower P ratio, maybe at 30 or 20. Because Maruti is itself selling around 20, 25. How can a paint company which is supplying to Maruti will be trading at 40 if it is not supplying to the retail segment? But like, some paint companies have some 10 to 15%, they are also retailing their products. So that's why their P ratio is slightly higher compared to the industry. Okay. So, so let's go here, okay, where you are, and then we'll come back to that. So P ratio is a very interesting topic, okay. So I'll come to that. I'll explain that more, because our classes very limited hai, so we can't do much, okay. So now, so the P ratio is here is 10. So we are assuming that this company's P ratio, it can be 20, 15, but I assume 10 just to explain that. So the share price is how much? 85. Because earning per share is how much? 8.5. It trade 10 times than its earning per share. Okay, fine. Now let's open this. There is, there are certain, columns which have been hidden. So I'm just opening. Unhide kar lo aap. Yeah. Okay. Now what happens is the sale of the company goes up from 1 lakh to 1 lakh 10,000 units. Okay. Assume that the sale of the company goes up from 1 lakh to 1 lakh 10,000. Now look at, the sale of the company that has gone up by 10%. Isn't it? Yeah, 10% बढ़ रही है. Company's, contribution is also going up by 10%. Okay. Now look at the fixed cost, it remains the same, because the company is not incurring another fixed cost, because only 10% increase. So they have all the costs already incurred. So they don't want to incur more, because everything is taken care of the company. But look at the EBIT. The EBIT has grown by how much? 43%. EBIT कितना बढ़ गया? 30,000 से 43,000. Why it has happened? Because the fixed cost hasn't moved, only the variable cost has moved. So, their profit has gone up by 43%. Okay. Now, their interest has also not gone up, which is the leverage part, because they have taken a loan. Okay. So, loan is remaining the same. So, look at the EBT. It has gone up by 53%. Look at the, the PAT. It has also gone by 53. Look at the EPS. It has gone up by 53. So earning per share has gone up from 8.5 to 13.1. अब क्या होगा? Look at 10% increase in the sale. The share price is zoomed to 130 in the market. Share price कितना हो गया? 85 से 130 with only a 10% increase in the sales, because they were able to magnify their profits and their, their bottom line. Okay, fine. So let's talk about, इसको हम क्या करते हैं? Let's say this, this variable cost यहां पर जो था, हाँ, ये यूनिट था, इसको हम क्या करते हैं? इसको हम कर देते हैं 95,000 or 90,000. Okay. Now what happens? There is a 10% decline in sales. Okay. There is a 53% decline in profits of the company and earning per share. Look at the share price of the company. It goes to 39 rupees. Okay. With 10% increase. Now I'll just tell you one phenomena. We'll check this. Now what had happened during the COVID time? There's a lockdown. Okay. Most of the companies were not doing any business. Fine. Immediately after the lockdown was removed, okay, the share market tanked about 30%. Whatever level it was, it went down by, from say 50,000 Sensex, it came to around 35,000, 30,000 level. I don't remember exactly. So it became almost like 30 to 5% down. All the companies were down by 50%. If the Sensex is down by 35%, it is an average. But some companies are down even by 50%. Okay. Now, the moment that lockdown was removed, there were some companies which doubled in a matter of just 6 months. जैसे ही लॉकडाउन खत्म हुआ, those companies which are high operating leverage, okay, they increased their sales by 25% and the share price doubled. Okay, because they didn't have to spend any money. They were having all the manpower, machine, equipment, everything. So they were not having, much of to do. So they didn't have any cost to add. So their sales, gone up, their profits have gone up, and the price recovered. The companies which had low operating leverage, they had not done so much well in the share market. So that was the right time to, compare, which companies. So the moment the lockdown was removed, the TV channels are saying invest in companies which have high operating leverage because they are going to double in no time. And it exactly happened. The share market doubled. Now, October last year, the market touched the highest level of the Sensex and then it dropped. So at that level, most of the companies had doubled the moment the lockdown was removed. And after 3 to 4 months, the company reported, first the quarter number and the shares, sales were going up and they were reporting the doubling of their profits and the share prices zoomed. So now let's come back to this. इसको थोड़ा सा उल्टा करते हैं वापस. Sorry. Okay. Now let's make it to, for example, let's make it to 1,01,000. ये वाली फिगर को, ये ऊपर वाली फिगर को 1,01,000. जो ये वाली फिगर है 1,01,000. Okay, fine. So here what is happening? 1% increase in sales. 1% increase in sales leads to 4.3% increase in operating profit of the company and 5.3 profit to the profit of the company. Okay, so here we can say that the operating leverage of the company. Look at the row number 13. The operating leverage is 4.3. Okay, there's a formula for that which is called contribution divided by EBIT, and financial leverage is the EBIT divided by EBT. So which gives you 1.3, and the combined leverage is 5.3, which is multiplication of 4.3 into 1.23. Okay, so there is an operating leverage, there is a financial leverage, and there is a combined leverage. Both impacts the profit of the company. Some companies have more financial leverage, less of operating leverage. Some companies have more operating leverage, but they can be so many combinations. So it's a combined, leverage which plays and actually magnifies the profits or losses of the company. As you have seen, if there was a 1% drop in the profits of the company, suppose we make it to say 99,000, so we can see the impact. So it is leading to about 5% drop in the ultimate profits because the combined leverage is 5.3. So 1% increase in decrease in sale will lead to 5.3 times decrease in the profits of the company. Is that okay? Have you understood the leverage impact? Okay. So financial leverage is again the same, because the company, it is basically coming from the interest. Company has taken a loan, they are paying interest. So interest is not changing, fixed cost is not changing. So both have their, leverage impact on the profitability of the company. Okay. फाइन दोनों कॉस्ट जो है फिक्स्ड नेचर की हैं सिर्फ वेरिएबल कॉस्ट ही चेंज हो रही है ना कंपनी की फाइन सो विच इज impacting the profits. So we can always in this Excel sheet you can increase the leverage, decrease the leverage, and then try to see what kind of impact you can. Yeah. किसमें नहीं है ऑपरेटिंग लेवरेज नहीं फिक्स कॉस्ट में इम्पैक्ट नहीं आया अगर 1% प्रॉफिट कंपनी का बढ़ता है 1% सेल बढ़ती है तो फिक्स कॉस्ट थोड़ा ना बढ़ जाएगी इट्स फिक्स्ड इन नेचर ना अगर सेल डाउन हुई फिक्स कॉस्ट तो उतनी ही है लेकिन आपका जो प्रॉफिट है वो और गिर गया मतलब इट हैज गॉन डाउन बाय ऑलमोस्ट लाइक 5% हैविंग बोथ ऑपरेटिंग एंड फाइनेंशियल लेवरेज इम्पैक्ट हैव यू फॉलोड दिस एनी क्वेश्चंस हियर समझ आ गया अच्छी तरह से ओके सो आई एम जस्ट पुटिंग इट डाउन नाउ हाँ so just to sum up again okay fine so what I am doing is I am just bringing to the stage where we were earlier यहां पर थे हम fine now if you look at the company's sale was 2 lakhs okay Then company reported a 10% increase in sales. So 10% happened. Then, company's contribution also gone up by 10,000 because the variable cost is also, gone up by 10. So the sales has also gone up. So contribution will also go up by 10% because it's all dependent upon the variable cost. But then the fixed cost has not changed at all. This is the cost, assume this is the rent of the factory, for example, or the salary of the manager or something. If there is an increase of 10% in the sales, you're not going to pay more rent. You're not going to pay more salary. Okay. Only the variable cost will go, which is the wages for producing the product. That is only given in the variable cost. तो यहां पर क्या हुआ, आपका 1 लाख का 1 लाख कॉस्ट रह गया. सो तो एक्स्ट्रा मैन पावर जो हायर करनी पड़ती है, वो देखो क्या होता है. हाँ, दैट्स अ गुड क्वेश्चन. एक्चुअली हम कह रहे हैं कि सपोज द कंपनी हैज अ कैपेसिटी, फॉर एग्जांपल द कंपनीज कैपेसिटी इज टू प्रोड्यूस beyond a certain capacity, the company doesn't increase any fixed cost. Assume the company has a spare capacity. Company is working at 70% capacity, for example. तो कंपनी ने 10% बढ़ भी की सेल, तो उसकी कैपेसिटी तो में उसकी फिक्स कॉस्ट तो बढ़ेगी नहीं. हाँ. फिक्स कॉस्ट में, हाँ हाँ. व्हाट्स योर गुड नेम? आपका क्या नाम है? किरण. एक्चुअली क्या है, आप कोई भी सिनेरियो अपना ले. आप तो कह रहे हैं कि मेरी यूनिट बढ़ गए और मेरी कुछ फिक्स कॉस्ट भी बढ़ गई, सो यू कैन बिल्ड इन एवरीथिंग. तो आप देखेंगे कि आपका, बिकॉज हेयर आई एम एज्यूमिंग दैट यू आर वर्किंग एट से 70% कैपेसिटी. ओके. सो योर कैपेसिटी गोज टू 100, देन यू आर गोइंग टू ऐड अ फिक्स कॉस्ट. लेकिन लेवरेज तो प्ले होता रहेगा आपका, लेवरेज कहीं नहीं जाने वाला. फाइन. बट देन द इट विल शिफ्ट टू अ नेक्स्ट लेवल. फाइन. फाइन. ओके. सो फिर आपको ज्यादा सेल करनी पड़ेगी बिकॉज आपकी फिक्स कॉस्ट लेवल बढ़ गया, 1 लाख से 2 लाख हो गया, तो आपको सेल भी उतनी बढ़नी पड़ेगी ना. तो दिस इज जस्ट टू एक्सप्लेन. ओके. सो डोंट रन योर इमेजिनेशन टू थिंक समथिंग विच इज बियॉन्ड दिस स्कोप ऑफ दिस एक्शन शीट. आप बढ़ा रहे हैं वो ठीक है, फाइन. इसका लेवरेज इंपैक्ट से कोई लेना देना नहीं है. लेवरेज इंपैक्ट व्हाट इज एक्सप्लेन, दिस इज द कंसेप्ट. द कंसेप्ट डजंट चेंजेस. ओके, फाइन. Okay, please listen to me. Let me just complete. So what happens that your fixed cost has not changed. Assuming now there the assumption, the big assumption is that you are operating at 80% capacity. Example. Okay. Now if it is 100, then you have to add some fixed cost, isn't it? तब तो change होगा. But then the level will shift to the next level, and then the whole cost structure will be again on a different numbers. Okay, but the leverage will remain the same. Fine. The impact which I am explaining, it will not change. Okay. So here your fixed cost is 1 lakh. In both the cases, not changed. So what will happen is there is a 43% increase in revenue in the operating profit of the company. 10% increase in sales has led to 43% increase in profits of the company, operational profit. And since you have taken a loan, so your interest liability is also not going to change, which means your profit has again gone up to 53% because you have two leverages. One is called the financial leverage, another operating leverage. Okay, both they don't change with a change in only when you are 100% capacity, then only they'll change. But since you are having a spare capacity, so up to that level, it will not change. Okay, fine. So your profits will magnify to 53%. Now, it has an impact. It's a positive impact. Okay, but you can always see that impact can go to negative impact also. If because it is company's high operating leverage means company has risky. If the sales drop, then the profits are going to drop by 53%. If there is a 10% drop in sales, which will lead to 53% drop in sales, and the share price is going to have an adverse effect in the market. Fine. As I told you, the share price has fallen to 39 rupees. Okay. So अगर हम 10% increase करते हैं, तो फिर ये 130 पे आ जाता है, क्योंकि 10% increase होगी sales, तो share price is going. Assuming the company, is trading at P ratio. P ratio doesn't re-rate. Now, the P ratio also gets changed in the market, but only when the company gets re-rated. Okay. If the company is, for example, like for example, let me understand, let me tell you, like Reliance. Reliance has oil business and non-oil business, the retail business and the TV media business and the geo business. Okay, so 50% of the business is 60% of the business is oil, 40% is rest of the segment. If suppose tomorrow, next 5 years, it's going to be reverse. 40% is going to the oil business and 60 going to the retail business, then the P ratio will get re-rated and Reliance will be trading at a higher P ratio. How? क्यों? I'm asking this question. You're not listening. Please listen. It's very important. क्या बताया मैंने आपको? कह रहा बताओ उसका तुम्हारा वो है सेक्रेटरी है क्या? अच्छा ये बताओ आपको समझ में आया है? The P ratios. I'm going to explain again. The P ratios, they can undergo a change over the years because if the characteristics of the company changes. अगर कंपनी का बिजनेस ही बदल गया है, अगर कंपनी रिटेल में ज्यादा चली गई है, ओके, एंड मैन्युफैक्चरिंग में कम है, तो उसका हाई पी रेशियो पे ट्रेड होगा. जैसे आई टोल्ड यू, लाइक एशियन पेंट इज ट्रेडिंग एट 60 टाइम्स, रिलायंस ट्रेडिंग एट 24 टाइम्स, और मे बी एज अ कंपनी विच इज इन मैन्युफैक्चरिंग लाइक टाटा मोटर्स ट्रेडिंग एट मच लोअर पी रेशियो. फाइन. सो रिलायंस क्या हो रहा है? रिलायंस का चेंज हो रहा है. रिलायंस इज gradually increasing its business to retail focusing. Okay, currently 60% is oil to chemicals and chemicals to petrochemicals, but now they are actually increasing their business into retail segment, which is retail business, digital business, and other businesses. Okay, media business. So they are putting more focus, and their sales are growing towards that direction. So their P ratio will get changed. So they maybe in next 5 years the P ratio of Reliance will be maybe close to about 30 because the business has changed. Okay, is that okay? समझ में आ गया नहीं? ओके, अब इसको समझ आ गई, बताने की जरूरत है दोबारा से? क्लियर. हाँ. 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 हाँ, तो जस्ट टू गिव यू व्हाट ही इज सेइंग, भाई इधर ये सेक्रेटरी साहब सुन लीजिए मेरी बात. सही. अब मैं आपको बताता हूँ कि बहुत अच्छी बात है. सुन, ये स्टॉक मार्केट से रिलेटेड है. प्लीज लिसन. एट द टाइम इन 2007 देयर वाज अ फाइनेंशियल मेल्टडाउन. ओके, and at 2007 the Sensex was touched 22,000 level. Today it's 72,000, 70,000 level, 70,000 plus. So उस time all time peak जो थी that was 22,000 Sensex, and the P ratio of Sensex companies was close to about 22, 23. Okay, I don't remember exactly, but it was above 20. नहीं 22 था. अभी बताता हूँ आपको. 22 था because there are various versions of P ratio, but 28 तो कभी नहीं गया था. It was 22. Okay, and it was the highest P ratio at which the market of India was trading, and there was a financial meltdown which struck the US, and there's an advance kind of a feeling that the stock market is going to fall. There were some indicators which was telling the markets are heating up and the markets are going to fall. So I had made a portfolio. I was working in Idea Cellular. About 3 years back, I started investing my money, and I had made a portfolio of about 50 lakh rupees. And my total value of investment was close to about more than 1 crore. And I was making almost like 5 to 6 lakh rupees per month in those days. Per month 5-6 lakh रुपए में बन रहा था. So I was seriously thinking ये जॉब क्या करें यार, यहीं से बन रहा है अपना काम जो है. So I want to start my own work or something, that I wanted to teach only, to work as a visiting faculty. So I thought I'll leave the company and do something of my own. But it was January, somewhere in middle of January, I called up my relationship manager who was at Citibank and told him, my portfolio is giving very good return. So abhi kya kare? Should we sell something? He said, no sir, the market may touch to 25,000 by March. Don't sell. But फिर भी I didn't agree to his advice. I sold about 10 lakhs rupees share. थोड़ा book कर लिया 10 लाख रुपए का profit. But the market on 17th of January, it started crashing. And the Sensex crashed to the level of 8,000. So there was a 60% decline. So whatever my portfolio was, whatever I invested reached to that level. 50 के 50 आ गया वापस. Despite I booked some profit, but I had making no loss. I was making no profit. Say within 6 to 8 months, the Sensex, climbed down from 22,000 level to 8,250. At that time, the Sensex was trading at a P multiple of 7. And according to the historical, data, 7 is the lowest P multiple at which any market has traded. The Sensex has not gone below 7. Even the US markets have not ever gone below 7. So that was the kind of a big support level. That is a big support level. भाई इससे ज्यादा और बुरा नहीं हो सकता. Okay, but the market after that within 2 years it recovered back to about 18,000, 19,000 level. Okay, so I never sold anything, so I got back to about 90 lakh rupees of my portfolio. But then from there on, it was like for next 5 to 7 years, the market had not done anything. Market वहीं 18 to 22,000 के level पे ही trade होती रही. So there was no increase. So then I dropped the idea of leaving my job. So I was back into my work. कि भैया, this is not the safe place. So let me just not be into thinking about the market can replace my job. So of course that decision I took after some time in 2008 and 9 somewhere when I left finally, because that reason was something different, not because of the market. Anyway, so I'll just come back to this. So अब इसको यहाँ से पढ़ते हैं. अभी हम आपको अभी दिखाऊंगा आपको. ये देखो, इसको बाद में दिखाते हैं, पहले ये देखते हैं. अच्छा, ये पढ़ लिया, आपको ये समझ आ गया? Is that clear? Okay. Now, betas from fundamental. Beta of a company is based on three things: type of business, the company's degree of operating leverage, the company's financial leverage. So we have seen that now through an example. Now, types of business. Just read it.